Hello, and welcome to another episode of the Market at a Grand series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So apologies, I'm having some connectivity issues right now, but I'm trying to fix as fast as I can. So as you all know, today is Tuesday. So we are looking at quite a number of events happening over this week. So we'll try to understand what that looks like and what to expect in the markets. So one key highlight in the market right now is the strength of the dollar. So since yesterday, we were able to identify these during the morning snapshot series. So from here, we saw the market bouncing from around 108 on the dollar index. And then today, we opened with a small gap, the market closed the gap, and then eventually rallied. So we have already beaten Friday's high, and there's a good chance that we'll continue seeing the dollar being strong in the market. So if this kind of trend continues, then it sets a pace or a path for us to continue buying the dollar against other currencies, and that might be quite profitable trading today or perhaps towards tomorrow. So if you have any questions or comments, feel free to type that in the comment section, and I'll be responding to that right away. So hello, Charlie. Hello, Charles. Thank you guys for your responses, and welcome to the session. So having known that the dollar is quite strong today as well as yesterday, then it makes sense to look at the major currency pairs and see how they are faring, since a majority of them were trading at major resistance levels. So for the pound USD, if you zoom out well enough, you will notice that the resistance level was there. You can see the last time the pound had swung all these high, it's also bouncing from the same level, meaning that it's a major resistance level and a pullback is in order. So from the 1 hour chart, you can see that we managed to reach there yesterday, and we looked at a potential trade outcome where price would drop back down to a previous level that was acting as the resistance and now could be the support at 1.258. So far the market has dropped significantly and it's already almost reaching our target. Then 1.258 becomes our key price level. So once the market gets to this area here, then it's time to observe whether there will be a bounce and price goes back up. But chances are we will be seeing some further downside. And if this happens, then the next target could be 1.25240. So it's a similar case across multiple currency pairs. So if you look at New Zealand USD, managed to reach an extreme price level and it's now pulling back. So Friday's high now becomes our target, which is around 0.631. So if you look at Euro USD, this has been the most important one. So for this one, we can see the price pattern here on the 4 hour chart. It was very clear. The market was forming a rising wedge. This is a combination of 3 highs that are slightly going higher and the lows are also getting higher. But then from the most recent price action on the 1 hour chart, I remember in the morning during the market snapshot mentioning that this is our key area of interest and we basically sit back and wait. So after the first candlestick drop, it was a confirmation that we have a break, and now we focus on the next target. And in this case, our next target becomes the previous low. So a price level of 1.09420 becomes the new target. If you are holding the position, good luck. Seems like you're almost there. But then once the price gets here, it becomes our new important price level here. So now we observe to see whether the dollar retraces or starts weakening, so that you can buy back. But then if there's a straight up drop, then we target the next potential level. So next potential level would be identified from the previous lows. So we have several times where the Euro USD was swinging back downwards. So this becomes the new targets, especially when you're trading based on technical analysis, because the economic calendar is currently not very busy today. We don't expect a lot of news announcements. The key data point we are waiting for is tomorrow's CPI data or inflation data from the US, and this is expected to cause volatility in Euro USD, among other dollar pairs, as well as gold and oil. So we also be looking to see some more volatility on US equity indices. So we will be focusing on that too. So for USD CAD, you can see the strong rally So this morning we identified 1.34113 as a target. So far it's well on progress. So we're almost there. But then once you get to that level, then it's time to be patient and then wait for indications whether the price continues moving higher or even pulling back. So it was our previous level that was acting as support. So now it may be our resistance. So you just have to be patient and see what price does at that level. Whereas for USD JPY, we mentioned that this is what looks like a loudspeaker, very close to what looks like a flag. But then now you can see the dollar has been very strong and it's rallying towards the upper trend line. So we could be seeing the market breaking that area. But for now, it's a straight up bounce towards the upper trend line. So we just have to be patient and extend our trend line to see what happens when price gets to that actual level. So the target remains on the blue trend line here that extends all the way back from this area here. So once the market completes the upper swing, then we will be observing to see whether there's a break or not. So as for gold, we were expecting that it would hit 2031. I remember mentioning this in the morning. So it made some good rally. You can see 2031 was a very instrumental price level here. Multiple times it was acting as the support level. And if you go to a higher time frame, then you'd notice that there's a period that it was acting as a major resistance level right here. So today, the price managed to retest that area. If you look at the 4-hour candlestick and how it looks like, it's a straight up rejection of higher prices. So now what we are seeing is a complete reversal. So on the 1-hour chart, it seems like it's going back downwards. So the key potential targets remain 2014. And if it goes down lower, then 2005. So 2014 and 2005 remain our target for now, as we continue seeing this reversal as a result of the strong dollar we are seeing in the markets. For AUD/USD, we have seen this reversal continue very well. So 0.67589 was our key price target. So we had mentioned that once the market gets to this area, then we wait and see. And now from the 2 hours price action that we have seen over the last 2 hours, it's basically indicating some potential for the downside. So 0.67371 remains our next target. And we could be seeing price cruising through this and eventually getting to the lower trend line. So perhaps 0.671. So US equity indices have been quite weak today. You can see the market is still trading in a flag formation since yesterday. So making these swings between the two trend lines. So any breaks might be very important for identifying a trading opportunity. But then if you look at US Tech 100, this was a major resistance level for the index. And now what you are seeing is increased pressure to move further back downwards. However, it's important to note that we are still within some form of technical pattern here, where these would be our upper trend line and our lower trend line would be residing along this area here. So observing for a break will be very important, especially on the 50-minute chart, to see whether we could squeeze in a position intraday. So same case for the Dow. This, I think, has been the most bearish one among the 3 top US indices. So managed to hold a very strong resistance here, pulled back down yesterday, and then today, an attempt to push even lower. So now we look at past price action, try and identify potential levels. So I don't think the market has yet reached this particular low here. So there could be opportunity that the market keeps going down and perhaps all the way down to 33,289. But then a pullback, a retest of this resistance would also be in play. We can't rule this out. So as for Brent oil, still trading within a flag. So we know that our flag formation is appearing on the 15-minute chart. So I'll try and plot this for everyone to see. So this is what we have been experiencing. Market trading between two trend lines here. So now the expectation is that if there's a break, then it will give us the direction the market is taking. But for now, it remains very tight, especially when you consider that our flagpole starts all the way back down. So this is the genesis of our flag. This is where it started. So rallied all the way up. And now it's trading within this flag. So a breakout to the upper or lower side, we can't quite pinpoint whether it will happen or not. But we know that if it breaks to the upper side, we go long. If it breaks back down, then we go short. So for now, it's playing along the trend line. So if you go to the 1 hour chart, you'll notice that this is a major resistance level, which basically indicates that there is a chance we'll be seeing some further downside in oil if we don't have a break. So potentially, this was our target when the market was going up. So this area which was acting as support is now resistance. And now the resistance doubles with the upper trend line, which basically indicates that it's a very strong holding area. So potential short positions could be coming in for Brent oil. So European indices have been the most vibrant today, having traded sideways for a while here, forming some form of flag or pennant. So we saw this happening, market trading in between this triangle before breaking early this morning and continuing to push down lower. So from the 1 hour chart, this is how it looks like. So I'll be expecting that this is not the end of the sell-off. So we've just entered the New York session. So if the Americans join the big sell-off, then you could be seeing some continuation of this trend and perhaps some further downside. So it's the same case for UK 100 or the FTSE. So if you go to H1, this was our flagpole, and our flag in the 15 minutes chart was very clear. So market was moving along this area here before it started dropping, broke the area, retested, and then continued going down. So there's still some more room for some downside in these European equity indices. So one more, the German or the DAX is also doing the same thing. So we can all see the strong leg that happened last week. So ending the indices on a high. But then if you look at the smaller time frame, you'll notice that the majority of the price action here was majorly sideways inside two trend lines, which are basically mirror what we call a frag. And now early this morning, we had a break. And since then, the market has been going downwards. So an expectation that this downside momentum will continue is still there. So perhaps we'll be waiting to see if there's more opportunities. And if you're already in, then you just keep patiently holding until the price action says otherwise. So that's a quick overview of what we have been experiencing. So I also need to bring another concept in mind of some dynamic that I think is changing in the markets. So one thing is if you look at the performance of Forex month to date, and by month to date, it basically means from the 1st of May to today, which is the 9th of May, majority of these currencies were very positive on the dollar. So they were all gaining against the dollar, the New Zealand dollar, Australian dollar, Canadian dollar, Japanese yen, the pound, the Swiss franc, and the euro. However, we have seen one of them drop on the month-to-date scale. But then, if you ignore the month-to-date scale and you move to the weekly, that basically implies this week, then, the last 5 trading days, then you'd notice that the dollar has really changed the dynamic. It's now stronger than most of these other currencies. So it's only the New Zealand dollar and the Australian dollar that has held gains against the dollar, whereas the Canadian dollar, the yen, the pound, the Swiss franc, and the euro have all lost to the dollar. And now, when you take this to the daily chart, and this basically implies today, or price action in the last 24 hours, then you notice that the dollar has outperformed all these currencies, with the biggest loser being the euro. And this is an indication of a changing dynamic, where at the beginning of the month, the dollar was really weak against all these other currencies. But this week, now the dollar has regained strength, and it's now outperforming these other currencies, with the weakest being the euro, the Swiss franc, and the Australian dollar. So with this information, now you know how to try and identify trading opportunities by pairing the strong currency with weak ones and then trading along that line. So for Euro USD, we have already checked out the chart. So if you just go to the Euro USD chart, then it's very clear that it's a very strong downtrend. So this is what I'm talking about. So since the peak of last week, which basically completed what we are looking at from the two trend lines, which is a rising wedge, we have seen the euro continue rising. So for last week, The Thursday and Friday price action were quite evident of bearish momentum. But then towards the end of the week, the market began recovering. Yesterday, the market was unable to form a higher high towards the upper trend line. In effect, it basically found resistance at Friday's high and then changed direction and dropped all the way. So today or this morning, the market was attempting to break this area here. And now we have a complete break, which can be easily identified, especially on the 4-hour chart. So if you're on the 4-hour chart, then you can see that we have a complete candlestick that is outside the trend line, which is a trend line that has held quite strong for several weeks. So with this breakout, it's an indication of a change of trend. So a potential big sell-off in Euro USD is expected to continue further downwards. So that's it for today. So let's check if you have any questions. Hey, Jace Code, we always show up. Thank you for showing up. I always appreciate these. Hi, Alexander and Joroge. What are your thoughts on pound USD? Bearishness. My thought is bearishness. But then if you are pound USD trader, you have to be very careful because we have a Bank of England interest rate data coming up on Wednesday. On Thursday. So this is expected to raise volatility for the UK pound. If the Bank of England decides to go for a 50 basis point, that will be extremely bullish for the pound. Even a 25 basis point hike, we also be expected to have some bullish momentum for the pound. So that's my expectation for pound USD. So what can we expect tomorrow on CPI? So across board, I'm seeing rising prices happening. So we saw in the last CPI data coming from the Eurozone, inflation jumping to 7% from a previous reading of 6.9%. And this was the first month in over 6 months where inflation went up. In the previous month, inflation had been generally going down, and it was on the right path, but the small jump towards the upper side was quite worrying. And now we expect the ECB to continue hiking interest rates. So the same case applies to the dollar. So if we happen to see a strong CPI number, it basically means that the Fed has a lot more to do, and the Fed may have to go for another 25 basis point hike, and that basically implies a very strong dollar and weakening equities. However, if I'm wrong and inflation comes below 5%, then in that case, we will be expecting that the Fed would potentially hold rates level, and that would be negative for the dollar and very positive for equities. So another question here, the candlesticks of same color, say red, on a bearish trend indicates on a key support level. How do we game on that play? So if you're seeing the candlestick of the same color, say three red candlesticks on a bearish trend, it's basically an indication of the strength of the participants in the market. So in this case, for instance, I'll give you an example. Let's say with the UK 100, I think that one has been very clear. So if let's say you are trading today, and then you saw this first candlestick, second and third, indicating bearishness here, it's only a testament that the bears are much more in control of this market compared to the buyers. So in this case, you expect that the market will continue. But then when it comes to making market entries and exits, you don't make them out of these. You have to be prepared to understand what's happening inside a consolidation zone before you take a trade. So in this case, for instance, if you're observing the resistance level and you saw the first and then the second candlestick, then these would have been your premium entry points, first or second candlestick. But then if you have to wait for the third candlestick or even the fourth, that is most often too late. So you want to make very precise entries in your trades so that you avoid setting big stop loss or losing on the money. So I think I've answered all the questions. So thank you very much, guys. One more point. If you're not part of my community, I'll try and share a link. So I know there's a lot of discussions happening. This is not FX Pesa community, it's my personal community on Telegram. So if you'd like to jump in, learn a couple of things from other traders, get to network with other traders and strengthen your trading game, then I would be very happy to have you as an additional member. So I'll be dropping a link for everyone. Yeah, there it is. So as I mentioned, for gold, we had a very strong rejection at $2,031 per ounce. So there seems to be some momentum coming in towards the lower side. So the near-term target for intraday traders is around 2014. And if the dollar remains strong, then even 2005 will be a nice target. However, it's also very important to understand that the dollar could just get into weakness level as we get into the New York session. And if that happens, then gold could retest the 2031 and cruise through higher to 2048. So that's still in the books. So you don't have to be taking these as a unidirectional trade. So you have to do your own research, you do your own analysis, and also understand that these sessions are not a recommendation to trade, neither are they trading or investment advice. So thank you very much, guys, and I hope to see you on the next one.